Hi, and welcome back to Investment Banking University. This is continuing on to the first step in the front office investment banking process. We're going to be talking about the coverage process. So here are a table of contents. We're going to start out by touching on the front office investment banking process, just to bring back where we are in that process as it relates to coverage. We're obviously at the first step, which is going to be coverage. And then we're going to go into why begin coverage with coverage process, choosing your own coverage, vertical and subvertical coverage, index building, metrics, benchmarking, and then reports and marketing material. So, as it relates to the front office investment banking process that we talked about in the previous presentation, we're of course starting with coverage, going into mandate target matching, origination, fee structuring and winning the mandate, underwriting, packaging, buyer list process, deal structuring, and the M&A process. So the first step, once again, is coverage. So why do we begin with coverage? So coverage provides the base knowledge for the investment banker that he or she will use to position himself as an expert deal maker within the field. Coverage defines the breadth and depth for their focus. So this includes at an advisor level, at a group level, or even firm level, just depending on where you're at as it relates to your career. Coverage gives us the basis for research and marketing material that we use in origination and other forms of marketing as well. So in terms of the coverage process, we're going to be going through choosing coverage, vertical and subvertical coverage, index building, metrics, benchmarking, and marketing material. So how do we choose our coverage? So first, the investment banker has to decide what size of companies that they're going to focus on. So this just depends on kind of where you're at in your career. If you're more established and you've been in the industry, maybe you're going to be focusing on public companies or mid-market, for example. If you're just starting out, or if you are, somewhat earlier in the process, maybe you focus on the middle market. If you're just getting started, maybe you more focus on the SMB market, and that's okay too, just to get some deal experience. So at least initially, investment banker is going to want to start in a small scale and then scale up from there. So even if that means focusing on the SMB market to get your process down, to get some experience underneath your belt, some confidence, that's going to be key. And really, the idea is just mastering each step in the investment banking process that we talked about in the previous course. As it relates to subvertical and vertical coverage, we need to decide what vertical we're going to become ultimately a specialist in. A lot of early M&A advisors start to try and work out as a generalist, and that's okay too. If you get some deals coming across your table, feel free to work on those, but you should really be trying to hone in on getting some sector specific expertise. So for example, if you have experience in manufacturing, you'll be able to speak to the concerns and the metrics of the industry, which lends you credibility in talking with different, buy and sell side folks. The idea is to be able to speak credibly to both buyers and sellers in the industry. And then geography is also a relevant consideration when choosing your coverage. So you can start at a city level and scale up from there to state and then region. Now that we have chosen our vertical and, sub verticals that we're going to be covering within that vertical, we can then go about building our index. So after you choose your coverage, the investment banker then builds an index for the vertical and sub verticals made up of public comps. And the index and the changes in the index are going to provide a measuring stick within which to evaluate targets against. So for example, the vertical may be manufacturing and the subvertical could be healthcare within that. And then we can drill down to even a product level as we're doing some of that coverage. And all of this is going to be very relevant when we're doing origination, when we're pulling different screens for types of companies. We're going to then have an index to be able to measure them against. In terms of metrics, now that we have this index indices that we're going to be tracking, we're really going to be keeping an eye on some of the growth rates, margins, and multiples within those indices, because these changes in these metrics actually lead to changes in behavior of firms when it comes to capital raising, in M&A decisions, whether it's to buy a company or to sell their own company, etc. These are going to be giving us the ammo within which to advise on strategic alternatives. So in terms of benchmarking, once the investor takes the index and then establishes the tiers, which turn into peer groups, this is ultimately why we pull comps to build an index and benchmark against those comps. The indexing and benchmarking that is done for a target company is going to serve as the basis for advising on strategic alternatives. And once one should build the indices at the vertical level, then subvertical, and then finally product level, so we can get very granular when we're doing these sort of comparisons. Now, ultimately, the output of tracking all of this information is the ability to build different reports, which can serve as market updates, marketing material, because ultimately we're in a sales role as an investment banker. When we're doing origination, that's a sales effort. So we need to be able to have the marketing material within which, and the reasons for reaching out to these companies on a regular basis to stay in front of them. So the metrics that we track within our indices and the benchmarking that we perform serve as the basis for further analysis in the form of sector reports that are distributed to companies in the origination process that we'll be talking about in the future. By demonstrating our expertise on what is happening in a given industry, we position ourselves as a go-to resource for advice. Marketing material may be distributed on a monthly or quarterly basis and can serve as a reason to have different touch points with different clients. That's going to be very important as it relates to staying top of the mind when certain events are occurring, whether there's a capital raise or an M&A opportunity available. So this is what we've talked about. We've talked about the first step in the investment banking process, which is coverage. And now we're going to be talking about the next step in the next presentation. Go and register at investmentbankingu.com. We're going to be talking through the entire process, getting access to the entire course, and then we'll be talking about some of the opportunities that presents. Thank you for tuning in.